Hello everyone, welcome to the 22nd of September weekly market updates on Technical Insights. This Monday morning, Asian markets started the last trading week of September a little bit mixed due to some profit taking after the US Fed announced a 25 basis point rate cut last week. The Japan Nikkei 225 index jumped more than 1% as fear declined over the impact of Bank of Japan's decision to sell its exchange-traded funds as part of their effort to phase out its monetary stimulus. China benchmark CSI 300 index also slightly up by 0.07%, while Hong Kong Hang Seng index is down by 1%. Hong Kong Hang Seng Tech index also fell by more than 1%, but losses were kept by PBOC decision today to hold their key lending rate steady at record lows for a fourth month in September, in line with market consensus. Over in the US last week, all three major US indices managed to clock weekly gains and reach new all-time highs again. The US Fed cut rates by 25 basis points last Wednesday to 4.25% in line with market expectation. This is the US Fed's first reduction in borrowing costs since December 2024 last year. The Dow Jones Index reached an all-time high of 46,396 points last Friday and managed to clock a record close at 46,315 points, ending the week up 1.05%. The broad index S&P 500 also reached a new all-time high on Friday at 6,671 points and managed to close the week up 1.22% to 6,664 points. Tech-heavy Nasdaq Composite Index also ended the week up 2.2% and was the top performer among the three US indices, touching an all-time high of 22,645 points before ending slightly lower at 22,631 points. Investors are now looking to the US GDP report that will come up this Thursday and the Fed Preferred Inflation Gauge PCE Price Index on Friday. This data will give us a check on how the US economy is coping with the US tariffs so far and whether inflation is under control, giving the US Fed more room to maneuver and cut the interest rate a further 2 times towards the end of the year. Tech giant Apple was one of the top performers last Friday, rising more than 3% on the Nasdaq Composite Index as the company's latest iPhone 7 went on sale globally last Friday. Back to Singapore, our STI index ended the third week of September down by about 1%, giving up much of last week's 0.8% gain, and also clocked the first negative week in 5. We started the week at around the 4,344 points level and ended the week at around 4,302 points, down about 41 points or 0.86%. This morning, the STI index is still largely flat and still holding above the 4,300 point level. Top weekly performers last week include Hong Kong Land, which was up almost 4.8% on the week after they announced a $738 million sale of its residential property arm, MCL Land. ST Engineering also performed well, up 4.2%, and YangZiJiang Shipbuilding was up by 3.4% for the week to round out the top 3 performers on the STI index last week. At the other end of the STI table, we saw DFI was the worst weekly performer, down 3.6%, as the retail group looks to improve its second half margin by closing its underperforming Guardian pharmacies in Malaysia. DBS also fell for the week, down 2.5%, as the US rate cut last week is likely to impact our local bank's net interest margin. Capitaland Invest rounded up the bottom 3, down by 2.5% as well. So for this week's technical analysis, let's take a look at top performer last week, Hong Kong Land. Last Thursday, after market close, Hong Kong Land announced that it would sell its Singapore and Malaysia residential property arm MCL Land to Malaysia conglomerate Sunway Group. The cash deal valued at 738 million Sing dollars was Sunway's largest deal to date and pushed its investment in Singapore past the Sing dollar 1.2 billion mark. Sunway will take ownership of MCL Land and its subsidiary following the deal, and this includes the ongoing development projects in Singapore alongside MCL Land portfolio of income-generating and development assets in Malaysia. Following the announcement, the shares of Hong Kong Land surged to a 6-year high on Friday to $7.45, and this was a 12% jump from last Thursday's closing price of $6.65. The stocks later retreated to finish the day at $6.73, but was still up 1.2% or 8 cents on Friday. Looking at the chart, we noted that Hong Kong Land share price was relatively stable in the first quarter of this year. On the 9th of April, Hong Kong Land share price hit a year-to-date low of $3.81 due to the start of the US tariff. The stock subsequently rebounded in the second quarter and reached a high of $5.75 on the 18th of June, which was a technical resistance level due to a double top formation that we saw in 2021. In the third quarter now, Hong Kong Land share price was seen consolidating around the $6 support level, with the 20 days moving average and the 50 days moving average now reading at $6.43 and $6.28 respectively. The low bound of the Bollinger Band in black is now at $6.06, also coincides with the $6 handle support level. Looking at the indicators, the MACD still has a positive reading indicating the presence of uptrend momentum. The RSI indicator now reading at 66, pulled back from last Wednesday high of 73 points reading, also indicate that there could still be some uptrend momentum, but investors will need to be careful when the RSI hit above this 70-point reading, indicating an overbought condition. So for investors looking at Hong Kong Land, you may consider accumulating Hong Kong Land share price again closer to the support level of the 20 days or the 50 days moving average at $6.43 or $6.28 respectively, and target the year-to-date high of $7.45 towards the end of the year. And these are the updates that I have this week. If you find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.